Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So, thank you guys for joining. I can see Maureen has already joined and commented. Shout out to you. Hello, Dennis Mwangi, Robert Kavale. Thank you guys for joining. So, as you might all suspect, today my background is a bit different. You might also hear a bit of some noise on the background, mainly because I'm shooting from a different location. Had to survive as a result of what's happening with electricity in my area. So, hello, Rono. Can see Rosary in the house. Ronitza Jack, the Muhaj series. Thank you guys for joining. So, let's get things started. So, we'll be starting with the economic calendar. And as you can see, Monday is quite a slow day. We don't have much happening. So since the market opened early this morning, we don't have any major news. So we'll be expecting some major news in the markets later in the week, beginning with GDP from Japan at 2:50 a.m. tomorrow. Then we'll be looking at the JOLTS job openings from the US at 5 p.m. So on Wednesday, this is where all the action will be for the better part of the week. So we'll be starting with a speech from ECB President Lagarde at 11:45 a.m. before we go to the main event of the week, which is a US Consumer Price Index, which is a measure of overall US inflation. So as per the previous reading, US inflation was at 3.0%, and in this case, we are expecting a 2.9% reading. So on the month, we expect that US inflation, or a basket of consumer goods consumed by the average household in the US, may have increased in price by 0.3%, which is basically a slowdown from the previous reading, which was an increase of 0.5%. So core CPI is expected to have increased also by 0.3%, a slowdown from the previous reading of 0.4%. So how do we process this information? So we know that Jerome Powell has been on a path of cutting rates, and he has slowed down on cutting rates as a result of inflation remaining significantly high above 3%. However, if we see a much smaller number, maybe below 2.9%, then that will give Powell more confidence to cut rates, and in that case, it could weaken the dollar further. So the alternative is also true. If we happen to see inflation remaining significantly high or elevated, maybe 3.0% or higher, then in that case, we should be expecting rates to stay higher for longer, and that's positive for the dollar. So on the central bank side, we know that the Bank of Canada will be looking to make an interest rate decision. So the overall expectation is a 25 basis points rate cut from the previous reading of 3% down to 2.75%. Of course, a rate cut will be expected to be weakening for the Canadian dollar. And as we've been observing with the previous rate decisions on the top central banks, traders have not been waiting until the day of the announcement. So you might start seeing weakness in the Canadian dollar early in the week before we even get to Wednesday at 4:45 p.m. So later on, we'll have a Bank of Canada press conference at 5:30 p.m. on Wednesday. And then we move on to Thursday, where we'll be focusing on the core producer price index. So core PPI will be released at 3:30 p.m. for the US, and of course, the producer price index, as well as unemployment claims, all at the same time at 3:30 p.m. Then on Friday, as we head to the end of the week, we'll be looking at the GDP from the UK. There will be the German final CPI. And of course, towards the end of the week, we will be focused on the preliminary University of Michigan Consumer Sentiment Survey, as well as the Inflation Expectation Survey. So clearly, we don't have much happening in the markets except for the major news happening on Wednesday, which basically means that between today and tomorrow, we'll be focused on technical analysis more. This might yield the best results in trading. And at the same time, you have to keep an eye on Trump. If Trump says anything, if he's holding any meeting, if he's making any announcements or signing anything, then that thing most likely will have an impact in the markets. So as of this morning, we have had quite a number of new developments. One, we have seen Bitcoin making some steady losses over the weekend. So currently, as we speak, it's trading at 82,000. So we'll be doing some technical analysis on that, try and understand what's happening to the overall crypto market. So among the key highlights in the markets this morning is one, China consumer prices fall the most in 13 months. This is quite concerning. And when you see consumer prices falling, in this case, it was a drop of 0.7%, then it basically means that China has more fertile ground to stimulate its economy. Printing more money to stimulate various sectors of the economy is only doable when inflation is very weak. If it's very high, then it can have very bad consequences on the economy. So in this case, we'll be expecting more stimulus from China, and this could likely lead to a strong rally in Chinese equities. So German exports fall for the first time in 3 months, dropped by 2.5% month over month. So still quite concerning, especially knowing that the German economy was just recovering. So there's the issue of Norway inflation. The rate rises to 10-month high, that is 3.6%. Germany industrial production beats estimates, in this case an increase of 2% over month. European markets head for a higher open. We know that last week they had begun quite weak and then they recovered towards the end. So now we are seeing a continuation of the recovery. Japan 10-year yield hits over 16-year high, and this has been quite concerning, mainly because the strength in the yields has also strengthened the yen. So the yen has been the favorite pair to buy compared to other major currencies. So on the other hand, Brent falls on weak China data and tariff uncertainty. In this case, a drop to $70.2 per barrel this morning. So looking at other highlights in the markets, we know that in terms of currencies performance, as of this morning, the biggest mover is still the Japanese yen, which has gained by 0.45% against the dollar. The New Zealand dollar is also pretty strong, up 0.42%, Australian dollar 0.23% against the dollar, and Swiss franc a little bit moved. So the weakest currency since the market opened has been the GBP. So if you look at the month-to-date performance since the month started, then the biggest gainer has been the euro, which made a very strong rally in the last 2 weeks. Swiss franc has also done well, the pound, the New Zealand dollar, the yen, the Australian dollar, and overall you can see that the weakest currency in the market has been the US dollar. So year-to-date performance, that is since the year started, you'll notice also a key difference. Somehow my chart is a bit slow to load. Okay, it has loaded again, and as you can see, the weakest currency since the year started is still the dollar, whereas the strongest currency has been the yen, which has gained by 6.75% against the dollar. So the euro has gained 4.44%, the Swiss franc 3.26%, and the UK pound 2.98%. New Zealand dollar 2.4%, Australian dollar 2.07%, and the Canadian dollar is slightly moved at 0.06%. So clearly, the Japanese yen is still the favorite strong pair currency to be looking to pair with other currencies. So outside of that, trying to look at anything else we might have missed. Of course, last night the Prime Minister of Canada basically resigned. So that could have some developments later in the week as we try to understand the markets. But then outside of that, I don't think if there's any other major news to be expecting for the day. So that being said, let's jump straight and try to understand some technical analysis as we approach the end of the presentation today. So just a moment. Yeah, here it is. And as you can see, the markets have been doing something similar for the last 3-4 days. And if you don't understand the pattern, I'll be showing you this. So this is the Dow Jones Index. And as you can see, this was the open about Wednesday last week. Market moved sideways for a while and then collapses later in the London session. So it did so on Thursday, moved sideways and then collapsed later in the London session. Then on Friday, it pulled the same stuff, moved sideways for a while in the morning, and then in the London session made a big drop. And today we are seeing a repeat of the same. So market hasn't been moving. Of course, we know that at midnight there was a big drop. That was at market close last week on Friday. And now we are seeing the market being sideways, and then all of a sudden we are getting into London and there's a huge drop. So this is a pattern that is well within grasp, easy to understand, and let's see if it's still playing out in other assets. So you look at US 500, it's the same pattern, nothing much of a difference. So we start the day with more of a sideways momentum, almost zero volatility. Then we get to the London Open at 11 a.m. and all of a sudden there's a big drop in price. So the Russell 2000 also doing the same thing. And of course, if you look at the Nasdaq, it's no difference. If you look at the 15 minutes chart, then you can notice there was a big drop earlier in the morning, market moved sideways, and now we are seeing the potential for a drop here. So as for the European counterparts, that is European equity indices, they opened with a gap down, crossed the gap, and now we are seeing a continuation of the price for the falling. So giving hints that the markets are still under panic. So we saw this panic happening last week. So you notice that the Spanish 35 IBEX is also falling strongly. So you look at the French CAC 40 index also having a big drop. And of course, the EU 500 being the most in panic, with a big sell-off praying right after the end of the Asian session. So if you look at other stock market indices, in this case, we start with the UK 400. UK 100. You can see that we had a breakout happening late last week and the market got back into pattern. So now we are seeing a huge drop playing out as we enter the London session, which basically implies that we could be seeing some further downside momentum. And of course, we could target some previous lows here around these price action levels. Here we are looking at 8,626 for the UK 100 index. So as for Japan's Nikkei 225 index, we are basically seeing a market that is also following suit. So still, we are looking at a potential sell-off. We could be seeing the market retesting the Asian low as the market panic continues to spread across different indices. So in this case, a potential extension of the move from the current price action level further downwards, perhaps at 36,706 price action level. So moving on to other indices, in this case, we will be looking at China. Then you'll notice that the China A50 cash index opened strongly bearish, but then towards the London session, it made some recovery, but then it's still not yet clear that we are seeing a very strong recovery, given that this area here was previously acting as support and now acting as resistance, which implies that we could be seeing a continuation of the original move back down to the previous Asian low. So as for the Hang Seng index, still very strong bearish momentum. So from the forward chart, this is how it looks like. So it seems like we have exhausted the bullish momentum, and it's time we see the market making a pullback. In this case, we'll be looking at the recent lows around 22,598. So on the commodities side, there's quite a number of commodities that are majorly traded here. I know that you guys' favorite is gold. So gold is still trading in this range. I would say it's moving sideways for the last couple of days. So if we highlight this area here, and then let's use the 1 hour chart, then zoom in, you'd notice that for the last 4 and today backing the 5th day, this hasn't been more of a momentum trade. So it's more of a sideways momentum where gold has been moving up and down, with the higher limit being around 29.29 and the lower limit being around 2900. So as of this morning, we are looking at a market that is really pushing to get to the previous low that we got in the New York session on Friday. So in this case, more likely that this momentum extends and gets to around 2900. And then we observe this area to see if there is a bounce and the market maybe maintains the same pattern and we continue seeing more of this sideways momentum. However, there's still a potential for a break down lower, but then the idea is to be patient, wait for the market to get to this area here, and then we see if there will be a bounce or a break. But for now, the momentum is downwards. We are at 2905. We could be seeing 2900 later in the day. So as for Brent oil, we had opened with a gap downwards, and now we are seeing the market recovering. So remember, we got to a multi-year low last week, and there was a big sell-off. So if you look at the price action last week, it was sorry, this is the forward chart. So this was last week. Market moving from 73 all the way down to $68 per barrel, and then bouncing strongly towards the end of the week. And now today we are looking at something similar. The market attempting to make further recovery. So if you look at the lows on Thursday, on Wednesday, Thursday, and Friday, they have all been getting higher, and today it's more likely that we continue with the bullish momentum as the market makes an impressive recovery from the big sell-off we saw last week. So outside of that, now looking at the dollar index, you'll notice that we had big sell-offs happening over the last couple of weeks, with last week being the biggest sell-off that we have seen in a long time. So following this, notice that this week we have opened strongly. The dollar index is making some good recovery. So some of the gains that we had made on Euro USD, Pound USD, and all these other major pairs, we could be seeing the market giving some of that gains back. So for Euro USD, I expect to see the market pulling back, perhaps to Friday's low. And it's a similar thing if you look at Pound USD, we are already seeing the market giving some of the gains back. So this is also a key level support, a low that we saw on Friday. So I expect to see the market pulling back to at least this area here, and then a potential for a breakout. You look at AUD USD, it's regaining some of the losses it had, it had made gains last week, and now it's giving some of those gains back to the dollar. So for this pattern, it shows that there is some form of consolidation here. So if you are quite observant, you'd notice that from this area to this area, it's more or less of a market trading in a triangle, which basically implies some form of consolidation. And then you go back to the 1 hour chart, then you'll notice that the price action we had on Friday and Thursday was the Australian dollar giving back some of its gains that it had made to the dollar, and I expect that to be the trend for the day, given the patterns we are seeing. So the special case that we are seeing in the markets today is the yen continuing with its strength. So for the last, I would say, 8-9 weeks, the yen has just only been strengthening against the dollar. And now looking at a new week today, it's more likely that we'll be testing this support with the potential for a break further back downwards. So in this case, I expect to see 146.937 on USD pair. Then for New Zealand USD, we are seeing a very strong rally here after bouncing from this area here at the beginning of the week last week. So the New Zealand dollar seems to be one strong pair for the day. So even if we are seeing bullish momentum, it could be coming to an end. So nothing of super bullish bets, especially considering it's a Monday and a slow day. So perhaps we continue seeing the bullish momentum, but it doesn't last long above that day's high. So I'll be looking at some of these levels around 0.57491. So on the other hand, we have USD CAD. In this case, this is the trickiest pair, one pair that has been really affected by Trump's tariffs and negotiations with Canada. So at the same time, we have also seen oil prices dumping and the Canadian dollar further weakening. So from what we saw last week, it was a majorly a big drop here, with the dollar giving back some of the gains to the Canadian dollar. But then this week, you can see that the Canadian dollar has attempted to recover, but then it being a strong dollar day, it means that there is more expectation that the dollar continues regaining some of its momentum. So I'll be looking at the high that we saw on Friday as a potential target, and that is if and only if the market gets out of this range. So you can see that since the market opened, we haven't had any form of volatility here. It's a market that has just been dead quiet. Nothing much has been moving here. So we remain patient until we see some volatility coming in, and then we'll have a direction on the markets. So pound yen still doing the same thing. We expected a drop here, traded sideways on Friday, and now we are eventually getting to our target. So 189.523 still being a key level target for short sellers in pound yen. So that being said, also remember we have new episodes of the Bullish Banter podcast. So make sure to check them out on FX Pesa YouTube as well as other podcast platforms. So I'll be showing you a highlight of our latest podcast. So in the latest episode, we hosted a Kenyan trader called Victor. He shared his journey. He began his journey and lost about $5,000, but he didn't give up. He went right back, studied how to trade gold, understood some of the key concepts when you're approaching the gold market, key behaviors in the pair. And so far, he has made some really good progress and broken even. So it's something that might interest you to check out. And if you want to improve your trading game, especially in gold, this might as well be a gold mine for you. So, getting a good question here. Most promising pair today and this week. I'll bet on USDN. USDN seems to be the one pair that has a very strong sense of direction. So at the same time, wouldn't sleep on European equity indices. They seem to be showing some strong selling opportunities. So a good question here. Hello, how do you interpret FinViz? Does it mean you pair strong versus weak currency for buys and sells respectively? Exactly, that's true. It's a historical data, so it doesn't help you predict where the market is headed. But then if you want to improve your odds, then you want to pair a strong currency with a weak currency. So while you are pairing a strong currency with a weak currency, you still have to do your technical analysis so that you make the best entries. And of course, you practice proper risk management. A good question here from Abigail. Uh, Please, anyone help? Is he saying the dollar is coming down today? No, I'm basically saying that there was too much selling of the dollar over the last 2 weeks. And today, from what we are seeing with the dollar index, it's indicative that the dollar is making some form of recovery. So we could be seeing a strong day for the dollar, given the big sell-off that happened in the last 2 weeks. So if we see some good dollar recovery, then it could present good trading opportunities in the markets. So another good question, is USD CAD correlated with oil? Yes, but as I always say, correlations are not permanent. They happen from time to time. So for instance, when the Canadian dollar volatility was being influenced by tariffs from Trump, the correlations were broken between the CAD and oil prices. So that's it for the day. Thank you, Spicy FX. Thank you guys for sharing and liking and subscribing to the channel. So make sure to check out these sessions on the daily. They happen at exactly 11 a.m. from Monday to Thursday, and we try to cover the main market movers for the day, try to identify trading opportunities, and once we cover that, hopefully everyone trades from an informed perspective. So as usual, I almost forgot to issue a disclaimer that these sessions do not constitute of investment advice. They are not a recommendation to trade, so you should always do your own due diligence and of course practice proper risk management. So enjoy the rest of your day, and of course I hope you have a profitable trading day.